Hello and welcome. This is the Insurance Pro Blog Podcast. This is episode 436. I am Brandon Roberts.
And I am Brantley Whitley.
And you are listening to the internet's favorite podcast about life insurance.
And life insurance adjacent topics.
Absolutely. And today is a life insurance adjacent topic. Because we made it an adjacent topic.
There you go.
We asked a question. A question that I'm sure a lot of people who work in lots of industries are asking themselves this very moment.
Mm-hmm.
That is, will AI replace insurance agents?
What's the answer?
Well, we decided we'd test this. We came up with what was it, 3 or 4? I forget the count. Four different scenarios where we asked AI to handle certain life insurance style contract purchasing decisions. So basically, it was our personal shopper, in essence, telling it, look, this is what we're looking for. This is what we need you to do. Basically, act like our agent and make recommendations to us.
Right.
And we're here to report on those results.
Yeah.
And at the same time, announce our retirement.
We're done. Well, I have a suggestion for AI in the insurance world, but let's talk about this first, and then I'll leave everyone hanging with bated breath, waiting for my conclusion.
Listen all the way to the end, even though it's not YouTube, and that really doesn't matter in a podcast format. Do it anyway.
Yeah, there you go.
Do it anyway. So four scenarios I mentioned. One was a very simple term case. Then we had 2 annuity scenarios, and then the big one, a cash value life insurance, whole life index universal life insurance situation.
Simple to most complicated, basically.
Yeah, basically. So let's start with the simplest one, term life insurance. We went to AI and we said, look, let's assume we didn't say let's assume, let's just say I am a 35-year-old male. I'm not technically, but sometimes I wish. So 35-year-old male, need $1 million of death benefit. I'm specifically looking for 20-year level term.
Mm-hmm.
So tell me, what am I going to pay and who should I buy it from?
Yep.
And AI did a fantastic job identifying what the price for 20-year level term standard rates should be. It told us what it thought it should be, and then we cross-checked that with brokerage quoting platforms that we have access to, and it basically right on.
Yeah.
It was a little on the high side of like the top 5, but I mean we're literally splitting pennies over the difference here. AI said $70.81. I think the best quote we got was $70.11 per month.
Yeah.
So inconsequential difference.
Yeah. We're in the ballpark.
Yep. And then of course it goes up from there, but top 5 quotes were in that right around that $70 and change number per month for $1 million, a 20-year level term, 35-year-old male. So it nailed that. It did comment on the fact that if we were healthy enough to be approved at some better risk class, preferred, it should go down. It didn't mention the fact that we could also end up being substandard, and at which point it would go up. So it left that part out. It obviously it lacks the institutional knowledge to give us any insight on where we should go. So the company recommendation, like the next step, contact these companies, was a bit funny. So 3 specific companies were named: Prudential, Haven Life, and Ethos.
Mm-hmm.
So what's strange about that is that all 3 of those organizations are a little different. None of them do the exact same thing.
Right.
Prudential is a bona fide life insurance company.
Yep.
Haven Life.
So guess what? If you contact Prudential, guess what product you're going to be presented?
Well, they're based. If you call Prudential directly in New Jersey, they're going to tell you, sorry, sir, you've got to contact an agent.
Yeah.
But yeah, they sell Prudential. So if you contact Prudential, you're going to get Prudential, and that's going to be it. Which, by the way, is not going to be $70.81. They're much higher than that.
Right.
Haven Life, which they don't do business anymore. They closed the whole thing. If you bought a Haven Life policy, it's fine, but that you cannot contact them and buy more life insurance from them. That was an offshoot of Mass Mutual, which existed originally just to sell term insurance, and they kind of dabbled in some other things and decided that it wasn't working for one reason or another. So Haven doesn't really exist anymore. If you contact them, you're not going to go anywhere. And then Ethos Life is a bona fide brokerage company. So they actually would be the best of the three to contact for this case.
Right. I mean, if you weren't going to contact us, that is.
Well, yes, they're right. Okay. They're the second best of the three. The best is us. You should contact us.
Right.
Sorry. Even I got it wrong.
Yep.
So in a good job, not great job, certainly not replacing what an agent could do in the case of saying, hey, I need $1 million, 20-year level term.
Right.
An agent would be able to identify and probably start and end the application process within like 15 minutes.
Yeah. I think it's one of those good if you're sitting around and you're going, I'm 35 and I should probably have $1 million of life insurance. Wonder how much that would cost.
Mm-hmm.
This is a use case for that.
Now, to be honest, I don't know that asking AI this question would be any quicker than Googling term life quotes and filling out the 3 questions that you'd have to fill out: age, amount you want, and zip code, probably, with most term quoters.
Yeah.
So both will do it. I think the term quoter will get you further faster.
Probably. But most of the term quoters, you have to put in some personal information, and then you get phone calls from 42 people over the next 24 hours.
Everybody's got a fake email they use for that purpose. Hell, we've even had people sign up for our email list that says something like spam email @gmail.com. So,
like, if I had a real email, I would send you an email to tell you that email won't work. But since you gave me a fake one, yeah, I just put yours in.
Well, thanks for that. That explains a lot in terms of random emails.
There you go. It reminds me of when I was probably preteen, back when the Miracle-Ear used to do TV commercials.
Mm-hmm.
We would send salespeople to our friends' houses and to sell them Miracle-Ears.
I should not admit this.
Back in the good old days. That's probably against breaking some rule, right?
Well, I was probably. I shouldn't admit this. I had a high school teacher who pissed me off once, so his email got signed up for all kinds of stuff.
All right. Well, scenario 2.
So scenario 2, we took 2 indexed annuity illustrations from the same company, but 2 different products. And we told AI, look, I'm in the market to buy an annuity. This is the amount of money that I want to put into it. You'll clearly see it from the illustrations.
Yep.
I want you to analyze these illustrations and give me a summary of their differences. So give me their weaknesses and strengths. And then I want you to tell me what you think I might do alternatively to this that could be better. My objective is to take this money that's going in there and in a certain period of time start taking income. And I really would like the income to be as close to guaranteed as possible.
Mm-hmm.
So AI did a fantastic job summarizing the 2 policies.
It understood the illustrations.
Yes. Yep. It understood that assignment. It made it very clear what the differences were. It made it very clear what the major differences were between them. One small error that really would require at least an intermediate level of experience to really identify. So one of the annuities had a guaranteed roll-up feature to the income benefit. So one of those deals where, hey, you give us $100,000 or whatever the number is, we're going to give you 8%, 10%, what VA companies used to battle with each other all the time about.
Yep.
So one of the contracts had that. The other one did not. And so the income benefit was based off movement in the index account.
Right.
So AI caught that. It identified that. And it told us very clearly that one of these contracts, the income benefit could be much higher or much lower than the illustration suggests.
Right.
The mistake that it made was telling us that what that means that there's a chance that this income benefit would actually be better than the other contract with that solid roll-up number, which is not technically false, but practically speaking, it was never going to happen.
Right. Yep.
So then the recommendations that it made. The recommendations that it made.
So these are like you're talking now about like what would be better.
Correct. So these are other options that you might consider according to AI, and they're not mind breaking at all, or mind blowing rather. That's the right phrase. So the first recommendation was to buy a deferred income annuity. Mm-hmm. So alternatively to buying a fixed indexed annuity with an income rider, you could just buy a deferred income annuity, and that income benefit could be higher. Mm-hmm. The second recommendation was you buy a multi-year guaranteed annuity, a MIGA, and you let that accumulate for your same plan deferral period. And then once that period is over, you take that new balance that has grown from the MIGA and you buy a SPIA with it, a single premium immediate annuity. Both understandable strategies. The wheels fell off when we asked AI specifically to justify these recommendations numerically. So don't just give me hypothetical. I don't want to chase this down. I want you to make a recommendation to me. Like, will it actually be better? And the figures, the numbers that AI used to justify these as better options versus the annuities, the indexed annuities that we had given it to analyze, were made up numbers.
Yeah, it hallucinated.
Yep.
So that just tells us it doesn't have access to information.
Correct.
To be able to give you empirical data on I'm not saying AI in general can't give you empirical data, but it does not have access to DIA or MIGA figures.
Nope, it does not. In fact, what was interesting about it is it gave us a percentage withdrawal rate for both the DIA and the SPIA. They were identical to one another. So my guess is it pulled that from some article it found online somewhere, and it just applied it universally to the concept of an immediate annuity.
Right.
Or income annuity being the more appropriate terminology.
Mm-hmm.
So the next scenario was, without giving it any illustration ahead of time, we said, look, 65-year-old male, got $200,000, going to defer income until age 70. In the market to buy an annuity specifically, what do you think would be the best annuity contract to buy for this approach?
Right.
And it identified deferred income annuities and fixed index annuities.
Mm-hmm.
It gave company recommendations. The company recommendations for deferred income annuities were much more in line with companies that actually sold deferred income annuities versus the recommendation list for the companies for fixed index annuities. So on the deferred income annuity side, it listed companies that we know absolutely sell the product, Mass Mutual, New York Life being its top two recommendations.
Mm-hmm.
Two decent companies, by the way, when it comes to deferred income annuities.
Mm-hmm.
The fixed index annuity recommendations, some of the companies sold index annuities, some of them did not.
Right.
So a little hard. It didn't really come down with a specific recommendation because, again, it doesn't have actual numbers. It did give a weird hypothetical based on something that I can only guess it pulled from an article somewhere, but they weren't real figures. Like they were neither way overstated nor way understated, but they weren't real figures that spoke to any specific product.
Right. Yeah.
But it also pointed out, because it's all over the internet, so it definitely is part of the AI knowledge base, that if we went the fixed index annuity route, we'd probably pay somewhere between 1% and 1.25% in annual fees on the fixed index annuity, as if that mattered.
Yeah. Not a question we asked, but okay.
But thanks for letting us know.
Yeah.
All right. The fourth scenario, which was by far the most complicated, and it was actually the one that we used in several different AI models to really kind of test how do they differ in their approach, and does one do it better than the other? So we went with something that we're very familiar with, sort of a question that we would get asked all day, every day, about purchasing cash value life insurance as a wealth accumulation strategy, retirement strategy, whatever have you. So male 45, $800,000 in a 401k, going to make contributions moving forward, $125,000 in an IRA, Roth IRA, going to make contributions moving forward, looking to put $20,000 a year into a cash value life insurance policy to age 65. Then most likely going to use that as an income source in retirement. Want to know, does it make more sense to buy whole life insurance or indexed universal life insurance? Want to know what the approach should be to a properly designed policy if it's going to be either whole life or indexed universal life insurance. And in the context of, look, want to know your recommendations on whole life or indexed universal life insurance, we should note that the majority of the assets held in 401k and IRA are stock market, stock exposed assets for what it's worth.
Mm-hmm.
all the AI models told us pretty clearly that in their opinion, whole life insurance was the right option versus indexed universal life insurance.
Mm-hmm.
The reasons it gave us for that were quite superficial. So in general, they were things like, well, since you already have lots of stock market exposure, it actually told us if you buy indexed universal life insurance, you're going to increase the risk exposure of your overall portfolio.
Mm. So fundamental misunderstanding of how the product works.
Yep. So it's weird, but to interpret that, it basically says that indexed universal life insurance is riskier than stocks.
Right.
By virtue of that statement. It really, really, really got hung up on the fact that indexed universal life insurance generally has stock market exposure. But what's weird about this, the incongruency of it, is on the side of making recommendations for a good indexed universal life insurance policy, if we were going to go that route, it noted, look for products that have multiple index options so that you can get exposure to index features beyond just the stocks. Beyond just, listen to me, the stocks. Jesus, I'm getting too old. Beyond just the stock market. So things that incorporate bonds, for example, as an index as well.
Interesting choice.
So weird incongruency in the sense that it's telling us don't do indexed universal life insurance because that'll just up the ante on the risk exposure.
Right.
It did identify paid up additions as a feature we should look for whole life insurance. It did not mention anything about policy blending.
Right.
It did identify companies. Its top recommendations for whole life insurance were Northwestern Mutual and Mass Mutual. It mentioned Penn Mutual and Guardian, but it didn't recommend them as the top choices.
Mm-hmm.
The indexed universal life insurance side of it, again, all over the place.
In terms of recommendations.
Yep, like just a bunch of companies, most of which do sell indexed universal life insurance. Some good, some bad. So the other thing that it did that we did not ask for, but it just went off on this weird tangent. Well, actually, not all of the models, but one of them. One of them very much wanted to tell us specifically how we should go about distributing money from the life insurance, the 401k, and the IRA in order to maximize our retirement income. Which was not the way we would suggest you do it.
Right. Yeah, and we were talking about this. I think one of the big problems for AI, because you and I have used it for various functions, it doesn't have enough context about these principles.
Correct.
We would need to feed it a lot of context.
Yep.
So that it could understand the most important aspects that we're looking at.
Mm-hmm.
And it would probably work pretty well in that scenario. This is actually probably one of those cases where if you built your own, your own AI, and fed it the information you wanted it to have, it would give you much clearer and well thought out explanations of things. But what this does to me is illustrate what the bias on the internet is, because that's what most of this stuff
that's
is
where
trained.
most of it comes from. Now we do. I mean, we can name names. Perplexity is one of the AI models we used. And one of the things about Perplexity is you can tell it to use the internet. You can tell it to use research papers. You can tell it to use social media, which we did. So it speaks to the bias that exists. I mean, I don't imagine it pulled much from research papers on this.
No, probably not.
But you can totally identify the bias that exists on the internet and on social media regarding the subject.
Yep. Shocking.
Yes. Now it did not go out of its way to say don't do it. So that bias wasn't there. The other thing that was interesting is on the second scenario where we asked, look, these are the indexed annuities that we're looking at. Are there other things that you would recommend instead of this? It stuck to insurance stuff. It did not say, well, you could just buy stocks.
Right. Which is what the internet would say. You don't need to do that. Yeah. Yeah, that is interesting.
So, one of the things that I personally think has been misunderstood about AI is that it doesn't have the capacity to think like we do.
Right.
It's really, really good at identifying patterns and then anticipating what the next item in the pattern should be.
Yep.
So it can infer, but it can't infer too far ahead.
Yep.
That's where a lot of the hallucinations come from, where it starts trying to figure out what the next step, and if it gets it slightly wrong, it just assumes that it's right, and then it starts to cascade from there in terms of how bad it gets.
Yep.
But AI models, they're not designed to think like you and I do. They're designed to identify patterns and then make recommendations based on their ability to estimate the next step in the pattern.
Yep.
And
if you don't have domain knowledge to guide it, to keep it between the guardrails, it will go off and give you some crazy answers that aren't. I mean, I will do things completely unrelated to insurance, but I will do things for that I'm working on, and it'll make recommendations for companies that don't exist, or companies that are out of business, or services that companies provide that they don't provide. So you have to be able to pull it back in and go, no, you're hallucinating again.
Yep.
And this company doesn't actually do that. And inevitably the response will be, yes, you're right. Sorry for that.
Yep.
You know?
Yep.
But so my point being, it's not effective, at least yet, for the general public to access information about insurance. I mean, conceptually, for sure, but not about individual products or product mechanics, because you need to have the domain knowledge to look at some response it gives you and go, that's not, that's way off, and then redirect it and guide it. My guess is it did really well with the FIA illustrations because you gave it a lot of data.
Correct. It had all the
all
data
it had to,
to
do
look
was
at.
Parse that data.
Yep. And all we were asking is give us the executive summary on what all of this means.
And it's really good at that.
And that I actually think is an application. And I've wondered if people that we send proposals to are doing that or not. I don't know. I'm not saying that you should depend entirely on that, because again, it got some things a little bit wrong in a way that might be important. But you can get like 90% of the way there.
Yeah.
And seriously expedite the process.
Yeah.
Of figuring out what all these pages mean. So that's a good thing. I will even tell you, I have had moments where I have fed AI things like life insurance illustrations just to see like what's its take on this. And there are statements that it made that, again, weren't like new information to me, but the way it said it was like, holy crap, I've been explaining that way more complicatedly all my life.
What? I'm shocked.
Yes.
No, yeah. It's very good at insights like that, for sure.
Now, I do think that the world of... Oh, go ahead.
No, I was going to say one of the things I've noticed, this totally unrelated to insurance, but one of the things I've noticed is I can write something like an email and that addresses multiple subjects in the email. And one of my core weaknesses is my ability to organize information that way. Like I can give you all the information, but it may come out in the oddest way possible that makes it very difficult to understand what it is I'm saying. And AI is really good at taking a block of text and making it much more digestible for a person to take your thoughts, your ideas, your words and rearrange them in a way that's like, oh, that's much more logical, 1 to 10 instead of being, 4, 8, 9, 3, 2. I mean, that's kind of how I do it. And
you write Latin emails. Syntax doesn't matter.
Exactly. Word order, that's subjective. That always got me in Latin translations. But anyway, that's really good. It's really good at stuff like that. And I think it could be a great assist when I write something and all the information's there, all the relevant details are there. I'm not asking AI to fill in details. I'm giving it the information and then I'm asking it to organize it.
Yes.
And it is.
Yes.
It is really good because that's pattern recognition, and it understands that very, very
Mhm.
well,
Mhm.
and can do it in a fraction of the time that it would take me to do it.
Especially trying to go back and edit. Like, I
Yeah.
gotta read this email again and try and figure out how to make it make sense. No, that's a great piece to it. And I think that within the life insurance industry, term quoting is absolutely an area where I think AI can add
It can own
some value
Yeah.
and eventually become the way that people
Yeah.
end up figuring out what the right life insurance policy is.
My guess is that it will become that before people even know it's happening.
Mhm.
Because the big brokers will, I mean, they can't ignore it.
Nope. But I also think that it's possibly going to wipe out several of the brokerage companies that are out there
Probably.
doing term quotes online.
Yeah.
There
just won't be a need for it.
It'll be way too easy. The
Well,
other
the only thing
area,
that life insurance companies have to do to make AI usable for that, for anyone really, is if they would stop putting that information behind, I don't want to call it paywalls, but login walls.
Yep.
Like we can get quotes from any company usually, but we have to go into their company software to do it.
Yeah.
Or access some other quote engine.
Aggregator.
Yeah, there you go. Aggregator. That's the word I'm looking for. Where everything sits behind a login. So that's why AI can't really give you precision on pricing.
There have been efforts, not AI efforts, but efforts to systematize and streamline that process with cash value life insurance policies. It's existed for decades. It doesn't work very well when it goes from one company to the next, to the next, to the next.
Yep.
It has tried, but it doesn't do it seamlessly. And maybe, but that's a long way off. I do see AI, and I suspect already this is happening, adding a crucial step in, again, shortening the length of process in the underwriting system or underwriting process.
Yeah.
The question is, will this become sort of an industry-wide adoption? Because if they do that, there's going to be a certain amount of proprietary aspect that insurance companies would need to relinquish, which I don't think they're going to do very willingly. So it's going to kind of become case-by-case AI models within companies.
Yeah.
I think that from a consumer standpoint, the preference would be, here is my sort of general makeup of health background. Tell me which one's going to give me the best offer. I don't think the industry wants that.
No. They see that as secret sauce.
Yep. So they're going to gatekeep that one.
As evidenced by the fact that even though we're contracted with many companies and can log into their agent portal, websites, finding the full underwriting guide is
not easy.
No.
And asking an underwriter what the likely decision would be, they'd never give an answer.
No.
It's a strange process, but internally, they could totally use AI to evaluate applicants.
Sure. Absolutely.
And make snap decisions on what makes sense.
This would obviously not be an off the shelf. This would be a custom rolled AI.
Yes, correct. Exactly.
Private,
so
not connected to the internet.
Correct.
Yeah.
Correct. And they're already kind of half step there in some cases. I say half step because it's not AI driven per se, and it also doesn't work in every situation. So there's a lot of knowledge gap on situations that would force manual review of an applicant. And that, I think, they could get better at with AI and eliminate 90% of those situations where their current streamlined system fails.
Yeah. Yep. I agree with that.
So, term insurance getting easier every day to buy. There's always been this idea that agents like you and I will sell term insurance here and there, but we're not going to sell it on volume to lots and lots of people. It's kind of become the moderate to cheap price vacation and what the Pricelines and the Travelocities did to the travel industry.
Yeah. Yep. I would agree with that.
So that's not an area that we necessarily need to be always engaged in, but we do work in it when clients ask, when people ask. We're not going to turn people away.
Sure.
But there is a system that has already been built for a process of buying term insurance. And I think it's a little clunky right now. And I don't think anybody's proven to be particularly skilled at doing it great. Select Quote, that was the one that went public to a lot of fanfare, but really hasn't made any money.
Right.
And then there's been a number of offshoots of term quoting companies that have come and gone because it turns out it's harder to do than people realize.
Yep.
I do think, though, AI is going to make it a more streamlined process, probably going to consolidate like crazy in terms of who the winner ultimately is, or maybe winners is in 2 or 3. But it probably will get them to be a much better buying experience.
Yep.
Some years from now.
And now for the punchline that I was holding out on.
Sure.
I think the biggest advancement in AI for an insurance company could be customer service.
Ooh, do tell.
If companies would feed all, because one of the difficulties we run into is companies, for reasons that are economic mostly, companies will discontinue old products and come out with new policy series. So you and I have been around for a while. So we have, though we may have a product with a particular company that we offer, we may on the books have 4, 5, or 6 different series of that product. And typically speaking, when a company discontinues a product, they also discontinue all the publicly available information about that product for whatever reason.
Yep.
But we still have people who own that product. And so you're calling in to talk to customer service at said insurance company to ask about a product that you sold 10 years ago. Well, the person that you're talking to just started working there 3 weeks ago. And they can't find any information. They know it exists, that they're not ignorant, but they can't give you any specific information because they don't know, and they don't know anybody who knows. And so
it's hard to know anybody who knows when you're doing this from your living room.
Right. So to me, it would be a fantastic use case for AI for companies to feed, build their own private AI, which they certainly have the resources to do, not that complicated of a thing to do anymore. And to feed it all policy data about all of their, various policies that are out there, all the intricacies of them, how they work. Because all this stuff is written down somewhere.
Yep.
I mean, they have to have this stuff.
We hope.
Well, it has to be. I mean, they had to file with these products with the states when they sold them. So all this data is out there. They could just make it accessible. Yeah. That's all. I mean, even if it's just to agents, not to, consumers per se, but that would cut down. I imagine it would cut the call volumes down tremendously.
Yep.
And it would make it easier for guys like you and me to get a correct answer quickly.
You're making all that time I spent learning databasing feel like it was a colossal waste of time.
But I think to me, that's like low-hanging fruit for the industry.
Yeah, it is.
They should have. And if they wanted to organize it into a chat bot, totally fine. However you want to do it.
Which is just a much more layman's approachable querying a database system anyway.
Yep.
To go in, ask a question, and allowing AI to pull from the data bank your answer without you having to know how to specifically go through the process of asking a database, where is this?
And as it is now, most of them have knowledge bases that you can ask questions to. But when you ask a question, it's obviously just operating off a keyword key.
Yeah.
And it just pulls up a bunch of stuff that's not relevant at all. And you have to weed through it. And it's like, why can't I just ask this thing a question and give me the answer?
Yep.
That would be amazing.
And the future is now. That exists.
Yeah.
That is exactly what AI is doing when you ask it a question. So there's no reason why they can't have a database of that information fed to an AI model.
Yep.
Yeah. Okay.
All right.
Anything else?
That is all I got.
That's all I have too. So I am Brandon Roberts.
And I'm Brantley Whitley.
And we will see you next week.